This is Alan Bush with the Daily Financial Forecast for Tuesday, November 1st. Starting out with the stock index futures, good gains in the overnight session. This linked to news that we are seeing some better manufacturing activity in China. Also, we did have several economic reports that did come in on balance a little bit better than expected. However, now seeing a little profit taking coming in as futures higher earlier, now a bit lower. But I would not be surprised to see a move back to higher on the day. Also, longer term, we do believe that stock index futures will remain in a bull market, and I would expect to see some new highs in all of the major indices probably within the first quarter of next year, or at least in the first half. Now, moving over to the currencies, the dollar index under a little pressure. Some of this may be linked to the better than anticipated Chinese economic data. Also, there could be some long liquidation ahead of the Fed meeting, which is a two-day meeting starting today, and we will get a statement from the Fed tomorrow at 1 o'clock Central Time. It is very likely that there will be no change in policy at this meeting. Also, we are seeing the Australian dollar sharply higher. This after the Reserve Bank of Australia kept interest rate policies unchanged. There was a slight chance that they could have eased credit conditions, so the fact that a steady policy is what they came up with is supportive, and the Australian dollar quite a bit higher against the US dollar, quite a bit higher against the Canadian dollar, and also my favorite long remains the Australian dollar. Still thinking the Australian dollar will continue to gain on the Canadian dollar, and this is a trend that I think will probably persist through this year and well into next year. Now, moving over to the interest rate futures markets, pressure developing, especially at the long end. Some of this linked to the Chinese economic data, as we said, coming in better. Also, most U.S. economic reports also a little bit stronger than expected. That a negative influence. So nothing really changing in our long-term view on the 30-year Treasury bonds. Still looks like lower prices are in store. And we also believe that inflation, though not apparently much of a problem now, we see it as likely to be a big problem down the road. That should be the main negative for the bond market. So continue to trade bonds from the short side. I think this is a bear market that is just getting started. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.